Good day, traders. I trust you are well. My name is George Nyabadza, broadcasting from South Africa. I'm a price action trader, schooled, trained, coached by Al Brooks, almost 15 years now since I first picked up his first book. And I've been through all the subsequent three books and through his course many times. So I'm pleased to be presenting to you this channel, which focuses on just showing one of the week's best price action setups out of the markets that I trade. Now, I trade 10 hours a day pretty consistently between Mondays and Thursdays from the open of the European markets, the UK and European markets. If you want markers, of course, opening of the FTSE 100 or the DAX 40, DAX 30, all the way through to the 18th bar US session, so the end of the US Open. So I'm in the market for those 10 hours consistently. Monday to Thursday, looking at 8 to 9 markets, pretty consistent with those markets. And Fridays, depending on what's happening on the home front, I could be in for 5 hours, 6 hours, or the full 10-hour slots. So out of those, I'm going to be presenting you best price action setup on the 5-minute chart. So subscribe to the channel and we will catch up on a weekly basis. So I'm going to turn off my video so I stop distracting myself and get on to this week's presentation. What I'm looking at this week, best price action setup for me is on gold. And again, as I said, from the opening of the UK market to the end of the 18th bar of the US session. So on gold, and I've been tracking this consistently, and I do that on the daily charts of all the markets that I'm looking at. We are coming out of this wedge pattern, 3 pushes up, which has taken place at the measured move target, and the bulls broke out above this trading range. Go to the measured move, bears tried to fail it, high, high, low, 2 wedge top, 3 pushes up. And with this beautiful bear candle, beautiful for the bears, of course, on Wednesday previous week. And then the week closed when breakout pullback low one. So that's where the week closed in the previous week. So coming into the open of the week, I always have my open of any day, which this time happened to be open of the week, always have my markers in place, the low of the previous day, high of the previous day, and of course, I have the low of this trading range as a target for the bears. I mean, that's where they want to get to at the very least if they are successful in the breakout pullback in the low one. So that's kind of the macro level view as I went into the market. Now, there is the low of the previous day, which I've marked, which I mentioned to you. And this is when I came into the session, 1 bar before the UK European markets open, and I'm out 1 bar. I'm out at the 18th bar of the US session, and we'll look at what took place shortly. So we had a failed breakout above the high of the session, and just before that, we've had the bears trying to break out and create a new low, which they did of the session. Beautiful for the bears, this failed breakout, high test. I mean, when I saw that happening, I thought, good for the bulls, but the problem was, immediately the bullish strength started waning with these small candles. So a bit cautious about jumping into the market. Then when I saw that high test candle, are the bears going to be strong enough, to come down to the low of the session, break out below the low of session, get to a measured move? So that for me was pretty interesting. When I saw that bear candle, I'm thinking, okay, the bears are strong enough, give me at least a decent trend candle to jump into the market. We decide where you want to put your stop, either there or above the trading range. But the target is here. And so you've got to be a little bit cautious when you trade. You've got to be able to manage your trade, because if you get to the target and the market starts to go sideways, or the bulls come in, you need to manage your trade accordingly. But that would have been a decent enough entry into the market. By the way, I am a swing trader. I'm not a scalper. I scalp out of trades, of course, if things don't go my way. But I'm looking for swing trades throughout the day. So that's my approach, and that is what I will be focusing on in my presentation, looking for the swing trades that may set up for us. And also, I prefer to be always in the market. So when things reverse, I get out and I'll try and get in again. So that would have been, if you're always in market, probably get out above here. But then with the lower high at the EMA, reversed up by the bulls, but pretty weak, ending up at the EMA. So the bears now have a lower high at the EMA and a fantastic opportunity if we break out beneath this low as bears to get to a measured move. So, if you're bearish, you start to think of ways to get into the market. And I like to see a follow-through candle. Just another trend candle before I jump into the market. In this case, we didn't get it, so just wait a little bit more to get more information. We still have that measured move target, we still have that measured move target, and the bears are strong enough again, out of from this lower high at the EMA, we can get, up to a measured move target. The measured moves are getting pretty close. So a whole cluster of hidden levels of support. So you can expect that, bears could come in, bulls could come in and buy and maybe force the market to a trading range or reverse, unless, of course, the bears are strong and they start to accelerate down. So this moment is probably wise as a swing trader to be flat, just to wait and get a little bit more information. So I saw the breakout beneath, that lowest close coming off from that lower high. And I said, well, let's see if we get, follow through, strong enough trend candle. Maybe we get the base can close beneath this cluster of resistance, of support. And if they do, then boom, we can accelerate down. But not much surprise to see that tail. Where would that come from? This cluster of support. Bulls are buying in here, trying to make the bear attempt fail. Ended up with a tight trading range, which for me, as long as it's below the moving average, signifies that the bears are strong. Of course, the bulls want the market to fail. They have an opportunity with all this cluster of support, but they failed to do much with it. Then when I had that trend candle, fantastic for a swing trader to jump in. Another lower highs with a succession of lower highs right from this high test. So bears are continuing to exert their influence over the market, continue to show strength, staying beneath the EMA. So now we have another lower high, tight trading range pullback to the EMA, bear breakout beneath that EMA. We've got all sorts of things there, double tops, micro double tops, micro wedge tops, everything taking place, but good for the bear. So that would be another fantastic opportunity to have jumped in, put a stop above the trading range or use a measure of stop and put a stop a little bit higher. So that's good for the bears. And then you got to wait and see if the bears can follow up. And the bears followed up with a beautiful candle, having completely eliminated the resistance from the bears of the cluster of support and beneath the tight trading range. Bears had a beautiful breakout below the tight trading range, so good for the bears. Now, if you didn't get into that, you might want to get into that, but you got to now start to consider where your stop would be. If you're comfortable with a stop up here, then fantastic. If not, wait for a breakout pullback and see if that will come. Good opportunity. If you're in, you can still take that trade as a breakout trade. Absolutely nothing wrong with it. You can take the breakout trade and just manage your trade. We had that pullback that I saw as the first pullback in this bear breakout. And that gave me an opportunity to see where measured moves could be. Next targets, so breakout beneath the tight trading range to where the pullback came in. There is a target for the bears. There is a target for the bears, measured move target, so confident to stay in the market. We had another little pullback taking place here, lowest close, and as the bears broke out beneath here, we're starting to get into the realm of the that measured move level of support. So a little bit cautious, getting into the afternoon session, getting into the open of the UK market. So I'm not keen, US markets not keen to jump in at that particular moment. But if the bears are strong, get a decent enough breakout and pull back, happy enough to get in. We ended up with a trading range forming right here at the level of that measured move. So I'm no longer keen to jump into markets. Getting late for me because this is when I come out of the markets. bears at a measured move, and it got to the measured move. And by that time, that's optimal to get out of the market for me. So this is the kind of approach that I'll be taking, guys, in the channels of first broadcast. I hope you absolutely enjoy it. Now, what came out of this is fantastic. This is what we can, this is where the day ended up. Now, the day ended up right here, testing the law of that trading range, which created the measured moves. So, going into the next day, of course, would have been concerned about what the bulls would do at that level. But this is the approach, and I trust you enjoyed the first video. If this is your introduction, or you come into this place in terms of price action, and you want to get Coach trained by Al Brooks, I have a link in the channel content for you to go and just click on and get directly to the Brooks trading course. Buy the course, and come back and check out my weekly videos, do a Q&A, ask questions, and I hope to assist you in your journey as a price action trader. So my name is George Nyabadza. I look forward to catching up with you again next week. Take care, guys. Happy trading and create great profits as a price action trader. Bye-bye.